What's happening, guys? Welcome to a September 17th edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. And we're going to jump into a lot today regarding what's happening with the markets. It has been a bit of a wild ride, especially if you've been in altcoins. We can see right here, there's been quite a separation between those that have thrived and those that have essentially fallen and not done so hot. So depending on where you've been positioned with your portfolio, you either had a pretty good week or a pretty bad week. If you've been more on the safe side and holding the number one and number two assets for the majority of your holdings, you were mostly flat, if not a little bit up. Bitcoin is currently at 47.3 after being at above 48K the last couple days. And Ethereum is sitting back at 3460, which a week ago, if I said that, it would actually sound like a good thing, but it actually was over 3600 a couple days ago. So things have kind of very subtly retraced for the two top assets, and many altcoins have kind of followed with larger retracements. But for now, things are mostly flat for the big coins and all over the place for the smaller ones. Just to remind everyone, this is a non-investment advice related call, and we try to give as much advice as we can based on what the fundamental metrics on Santiment are showing any given week when we do these. So with that being said, Dino, what have you been seeing?
I mean, the big story, I think, of the week has obviously been Solana and all of the FUD relating to Solana in terms of the network sort of outage that lasted for, I think, about 24 hours and how that has impacted the price of the coin. So what's interesting about Solana in particular from the vantage point of our metrics, we have a lot of social metrics for Solana, and those metrics have been recording all-time highs throughout the rally. So Solana related social volume, or the amount of mentions of Solana on crypto related social channels, have been exploding throughout the rally. And we kept thinking, this one was going to be the top, because usually these massive spikes in social volume coincide with, periods of incoming correction. So it actually took a while before Solana was finally topic. But what's most interesting about it is that the biggest spike so far in Solana's mentions on crypto social media came after the outage. So it was more sort of talked about online than any other point in Solana's rally. It seems like a lot of people thought, it was one of the biggest threads on not just the cryptocurrency subreddit, but on the all of the subreddit, where people basically said rip Solana and whatnot. So I think it's basically at the moment it's a little bit oversold. It could be, the network is back up. We obviously at the moment don't have on-chain data for Solana, but its social metrics do suggest that the crowd is going very hard on Sol at the moment, maybe even a bit too hard. So we'll see. There could be a little bit more room for Solana to correct, but Max seems to think, our CEO, that once Solana sort of finds its bottom, it could be a good opportunity for alts to start to recover and rebound. So that's the big sort of news from this week. The second, probably for me, biggest impression, actually I have two of them. I'll just mention it and then we'll talk about them during the call. Number one is Bitcoin's network activity. So I used it as a thumbnail for this video. Active addresses for Bitcoin have just crossed a 4-month high. So 1.11 million is a massive amount of unique addresses interacting with Bitcoin. This is the largest that it's been since May. It basically suggests that there is, the activity on the network is back. It's back to basically the last time that we were at these levels in May. So it seems like the demand for Bitcoin is rising at a steady pace, even despite this correction, which I think is generally a good sign. If we see this continue over the next couple of weeks, it's probably a good sign. So that's one thing, but I'm not going to go into it all that much right now. And then the second thing is there was a massive transaction for Ethereum over the last maybe about 5 or 6 hours ago, just before this latest correction. And we found it in our transaction data. We identified exactly what transaction it was. It was about 600 million Ethereum being moved to Coinbase. So we'll talk about that as well. It's a very recent development. It happened right before the price of Ethereum started to correct once again. So we can show how you can find it sort of in real time by using our data. But let's start with Bitcoin, and then we'll jump into these other assets, Brian.
Yeah, absolutely. We can start with what we were just talking about here with daily active addresses. Obviously, the spike that Dino's referring to, don't mind my slow laptop, guys. I apologize if things seem a little laggy. But this spike right here at 1 a.m. my time, Pacific time, was the highest spike in address activity since May 14th. So that's a legitimate 4-month high that we just saw. And you've heard us say plenty of times, daily active addresses combined with circulation, sprinkled in with a few other top metrics that we cover, are more or less the best indicators and the reasons that Bitcoin pumps up and down the way it does. And when there is more utility, like we just saw, and are still seeing based on the natural fluctuations of the day, we are at a very high point, which is a very solid sign that things can turn around, and this is a legitimate bullish indicator. Now, we're still not up at the level of like 1.2, 1.3 million like we were seeing in April and May, right around the all-time high and right afterwards. But more or less, it's something that we can be very encouraged by, wouldn't you say, Dino?
Yeah, so I think even better than what you're showing right now, Brian, which is a 6-month view, is probably a yearly view, because you can see exactly how much we've dropped after the May correction and where we are now. It looks even more impressive when you look at exactly where Bitcoin was just a couple of months ago in terms of daily active addresses and where it is right now. In fact, since the bottom on July 20th, check this out. So the price of Bitcoin has increased by 53% overall since the July 20th bottom, and the amount of daily active addresses have increased by 50%. So those two are keeping up to par, especially with this latest uptick. And one other thing that I mention quite often here is that before the May correction, between January 1st and May 15th, there were 5 or 6 days in total. I always forget exactly how many, but let's say 6, just for clarity. Let's say there were 6 days total that the amount of unique addresses interacting with Bitcoin were below 1 million. So there was a very consistent, steady uptick in the total demand for the coin on a daily basis, and in the total amount of value being created by these addresses, which kept growing throughout the first 5 months of the rally. And then once we had the May correction, the total amount of addresses, unique addresses interacting with Bitcoin has fallen below 1 million, and it has struggled to get back above that level for several months now. The first time that it actually did so was back on September 2nd, where it pushed to above 1.08 million. And then now we see a new record for the September, which is 1.11 million. Now, I think it's pretty clear that we're going to see a slight dip in the amount of addresses interacting with Bitcoin over the weekend. It's always happened. It always happens in general. Just less people interact with cryptocurrencies over the weekend. It's nothing to be scared of. So I think starting Monday and Tuesday next week, it's going to be a very important battlefield, these daily active addresses, to tell us where Bitcoin might be headed. If Bitcoin is able to sort of recover to these levels of 1.1, 1.15 million addresses on average over the next week, I think that's a very strong sign that fresh blood has moved back into the trades, and we have some type of fundamental support for the rally. If it drops back to, to be fair, Bitcoin's daily active addresses have dropped to as low as 500,000. So if we see those numbers start to move back down to like low 800Ks, low 700Ks, that could be more of a bearish indicator. For now, I think this is a very hopeful sign. It's a very early sign. It happened just today. So, don't go out and make any rash decisions based on a one-day sort of statistic. However, I think it's a hopeful sign that, especially given the fact that we had a correction just maybe 10 days ago, we were able to recover in terms of on-chain activity so quickly. I think it sort of shows how, especially now that altcoins are sort of slowing down and Solana is sort of in the back mirror and whatnot, a rear view mirror. I think a lot of people and a lot of attention might be moving back to Bitcoin, and so that's what we're seeing in terms of its network data. So one positive sign, positive development, and cautiously optimistic development for BTC. And then, Brian, to tie in with that, while we're talking about addresses for Bitcoin, you published a tweet a couple of days ago about a specific group of addresses that we have been keeping an eye on, and that might also be positive for Bitcoin, right?
Oh, you're talking about the supply distribution. Yeah, absolutely. Let me show that right here. So what we're looking at right now is the past year of holdings for the 100 to 10,000 Bitcoin holder tier. We call this the millionaire tier because they're essentially the addresses that are holding anywhere between, currently it would be around 4.7 to 4.8 million, all the way up to about 470 to 480 million dollars worth of Bitcoin right now. And as we can see over time, clear accumulation is happening. This is in terms of supply held. And a year ago, they were sitting at about 47, give or take 47.1%, and they're now up at 48.86%. So give or take, 1.7% increase, which doesn't sound like a lot until you realize what 1.7% of Bitcoin's supply really is in terms of dollar value. And I'm not going to do the math off the top of my head, but it is a lot. It's a lot of money. And when this kind of tier that is essentially considered to be the largest group of actual human holders outside of those exchange addresses consistently, once you go past like the 10,000 threshold, they have major control over the direction of Bitcoin. And you can see as early as, like the turn of the year, there was a big, dump, if you want to call it that, at least a moderate dump right after this big spike here. And then the price kind of retraced for the rest of January. Sorry for the refresh. And then a larger dump right as the all-time high was happening that eventually foreshadowed this May dump here. And then you saw this accumulation, which foreshadowed that we would be able to recover. So it's a lot of whales moving in one direction and then the price reacting on average maybe a week or two later, if not just a few days sometimes. But this is a great leading indicator, and there's a reason we like it so much. And what we covered a couple days ago was the dump that occurred right around September 9th, where it went from, this was give or take around a 60,000 Bitcoin dump. And then a few days later, it actually was instantly scooped up, and it could have been by the same whales. It's very tough to say, but this was mysteriously consistent with, the amount that was dumped versus the amount that was accumulated in roughly the same pattern. We don't normally see a complete U shape like this, but Bitcoin essentially followed them. We saw them begin to dump when it was at 52K. They got down to 48.5% after being at 48.9%. And then as prices dumped to about 44 to 45K, we suddenly saw this big accumulation once again. And now they're right back where they started,
So I have something that I wanted to share. If you don't mind me taking over the screen for a second, Brian, there was a chart that one of our community members in a Sandbase Pro group. So this is a Discord group, Discord channel that we have, that is a paid subscriber to our platform. And there was something that he drew up, which I thought was very interesting. Let me try and show it to you here. So what Brian was showing was these two groups merged, right? This is what we like to look at ourselves, is all of the addresses holding between 100 and 1,000 and 1,000 to 10,000 Bitcoin, because over time they seem to show very interesting patterns when compared to Bitcoin's price action. Now, this community member, instead, he likes to look at this group in particular. So only those addresses that hold between 1,000 and 10,000 Bitcoin. So those are sort of heavy set millionaires and larger Bitcoin whales. And he drew two channels that I thought were quite interesting. So one channel would be here. And then another channel would be here. And let me do it justice. So we seem to be sort of at a precipice, at a turning point here, at one way or another. So it seems like we are waiting to see whether this channel can be broken to the upside in terms of the these large Bitcoin whales and their combined holdings. They're currently holding about 27.9% of Bitcoin's total supply. I'll show you exactly how much that is in raw numbers. That is, let me delete these for a second. That is 5.26 million Bitcoin, right? So the next question is, where do these whales, where do their holdings move next? If they start breaking up again, we will have broken this downward channel, and it might be a very strong sign for Bitcoin's future price action. So it's something that I thought was quite interesting, the way that other people look at our charts and try to find patterns that they can use for actionable insights. So anyway, Brian, if you wanna, you can switch back to your screen.
No, I'd say honestly, Dino, keep it on yours because my poor 5-year-old chugging laptop is not what it used to be here.
Yeah, sorry guys, Brian is away from his computer, so he's on his laptop. And in the meantime, I actually wanted to talk about one other thing, which I thought was quite interesting, which is the both exchange flow balance, but also just supply on exchanges for Bitcoin. So throughout this crash, guys, since the September 7th correction, throughout this entire mini correction and mini crash, and even with the bounce back, we have not seen a whole lot of Bitcoin being moved to known exchange wallets. In fact, we have seen the exact opposite. So even though there has been quite a volatile time for Bitcoin over the last couple of weeks, the amount of BTC that is available to trade on centralized exchanges, on known exchange wallets, has dropped and continued to decline throughout September. Now, generally speaking, in the past, this has sometimes been a positive signal for Bitcoin's price action. Actually, this is what we have seen during the first very early leg of the rally back in October and November. We have seen a massive decline in the amount of BTC that lives on exchanges. The idea being with if all other things are considered equal or have stayed the same, if there's a same amount of demand for Bitcoin, but the amount of BTC available to trade or the supply of Bitcoin is less, or is less available, it could lead to an inflation of the price of the underlying asset. So even another sort of potentially positive signal that we're seeing, at least according to our data and our address labels, is the fact that throughout this entire ordeal, active addresses are growing, whales have started to accumulate once again, and the supply of Bitcoin on exchanges is yet to push up, suggesting there's not a whole lot of new sell-side pressure, at least so far. This might very quickly turn if we go back to 50K, and we see another sort of significant spike, suggesting that Bitcoin holders are starting to take profits, starting to apply negative price pressure, and we might see another sort of period of price normalization. But so far, honestly, I'm quite cautiously still, but optimistic about Bitcoin's chances, especially if these metrics continue in the direction that they are currently pointing at. So active addresses up, whale holdings up, and the supply on exchanges down. So far, I think there are several charts that I am personally looking relatively bullish towards. So that's one thing that I wanted to show. And then as far as Bitcoin, go ahead, Brian.
I was just going to say that's the most sustained drop in Bitcoin's exchange supply since mid to late October, from the chart we were just looking at, and we know what happened around there. Price just absolutely exploded. So take that for what you will.
So one last thing that I wanted to show as far as on-chain data for Bitcoin is concerned, because I want to also cover social data, and there's very interesting stuff for Ethereum today that I don't want to miss. Let's just talk about its MVRV, right? So when it comes to trying to figure out what is the potential sell-side pressure for Bitcoin moving forward, I think this is one of the best on-chain indicators out there. A lot of people use it, right? So for those that are not familiar with MVRV, what MVRV is, it is an on-chain metric that tries to, using data from the blockchain, tries to visualize or calculate the average profits or the average loss of all addresses that have acquired Bitcoin or any asset in a certain time frame. So 30-day MVRV ratio, which we're looking at right now, shows the average profits of all addresses that have acquired Bitcoin in the previous 30 days. It's as simple as that, right? So currently we're at about minus 1.07, means that on average, all short-term Bitcoin addresses or addresses that have acquired Bitcoin in the past 30 days are down on their initial investment by 1%. So they're basically just below break even, right? So the way that people use this metric is they look for historical trends and historical peaks and valleys, because as a rule of thumb, the higher the MVRV ratio is, the more unclaimed profits there are. And then as a result, the more likely it becomes that these Bitcoin holders are going to start claiming some of these profits, and then vice versa, or sort of by proxy, the more riskier it is to enter into a trade, because there's a potential of massive sell side pressure moving your way, right? Or against you. So what people like to do is they like to look at historical peaks to figure out what were previously, historically, what were the zones at which, short-term or long-term Bitcoin holders liked to take some of the profits, because the higher the MVRV ratio, the more concerning it is, and then the lower the MVRV ratio, the more opportune time it could be to accumulate. Obviously, this is just one metric, but it's how people use it. So I always say that, to me at least, about 15 to 20% seems to be a danger zone for Bitcoin's short-term MVRV ratio. So between plus 15 and plus 20% seems to be historically, and I'll draw a couple of lines just to show you. This is plus 15%, and then this is about plus, oh, no, one sec. Then this is around plus 20%. So I think this zone right here is a danger zone for Bitcoin. So even, yes, there have been several times that Bitcoin's MVRV ratio has sort of peaked or broken this channel, but even when it does, it only lasts for a couple of days, and it points to the fact that Bitcoin's MVRV ratio is becoming increasingly unstable and unsustainable. So this is where usually when Bitcoin comes or sort of approaches these levels, it can be dangerous for its short-term price action. So with that in mind, now that we know that, currently Bitcoin's MVRV ratio is around minus 1%. This is obviously, not as close to historical lows as one might want it, right? Because the lower that the MVRV ratio goes, the more interesting time it can be to accumulate. But at the same time, it's definitely some ways away from these bull cycle highs and this danger zone of plus 15 to plus 20%. So even from an MVRV ratio perspective, at least in terms of the short-term MVRV ratio, there is more room to grow before we can consider MVRV ratio to be overvalued, or the MVRV ratio to show that Bitcoin is overvalued. So as Bitcoin's price rises, Bitcoin's MVRV ratio is going to rise. It's just those two are very much correlated, right? So at the moment, I think there's still room to grow, but keep an eye on this chart. If Bitcoin starts, attacking the 50K mark once again, we are going to see this ratio move up into probably like plus 5 to plus 8%. And then at some point, especially if the rally is relatively sustainable, we're going to see it come back to this plus 15 to plus 20% level. And that's when we're probably going to start sounding the danger bells. So that's as far as the 30-day.
And Dino, before you close that out, I wanted to point out how interesting it is that despite the price making this moderate bounce here following last week's drop, the MVRV has actually come back down to neutral. And that's kind of indicative of the fact that that whale manipulation that we showed on that supply distribution chart was pretty effective at shaking out a lot of weak hands around the bottom. A lot of people were kind of fudding out of Bitcoin, or at least taking profits, saying, oh, if it's going back to 45, 46K, I better just get out now because it could keep dropping. And then suddenly it goes back up, but the MVRV didn't, indicating that the average trading returns were not benefiting from that rebound, because a lot of traders were making inaccurate decisions and selling low and buying high, especially over the last 30 days here.
Yeah, it's definitely a very interesting sort of microcosm of Bitcoin's MVRV ratio is in the past 30 days or so. But honestly, I can't say that I'm super concerned about it, at least from a 30-day perspective. It's just, it's pretty low. And then the last thing that I wanted to show is the 365-day MVRV ratio, which is more concerning. But I mean, compared to Ethereum, it's actually not that concerning. Like, yes, the long-term MVRV ratio, so this is the average profits of all addresses that have acquired Bitcoin in the past 365 days. So currently we're at plus 17%. So on average, if all addresses that bought or got into Bitcoin in the past 365 days, their up by 17%. So there's quite a bit of profits that they could start to claim, right? But even still, and yes, we are sort of at a, let's say, sort of this potential resistance zone right here, which we have been several times in the past. But compared to bull cycle highs, we still got some room to grow. So this is sort of a tricky channel in general, where we see Bitcoin has struggled in the past to break it between like, once again, between like plus 10 and plus 15 and plus 25%. But if we do, I think there's still quite a bit of room to grow before we hit these both 2020 level highs, 2019 and 2018 highs. So there is, according to MVRV ratio, more room to the upside, potentially. This obviously doesn't mean that Bitcoin is going to achieve this, but from a fundamental perspective, at least, it's not still a red flag. And that's the best that we can hope for the time being, right? So that's another thing that I wanted to show. So I think, Brian, it's a good time to look into social metrics for both Bitcoin and other coins. And let's start with social volume. So social volume, for those that aren't familiar with this metric, it's something that I think is currently only available on Sandbase, and nobody really does it as good as us. Social volume is a metric that tries to calculate the total amount of Bitcoin related mentions or any coin related mentions on crypto social media channels. So we currently track around 1,500 crypto social channels, including Telegram, Reddit, Twitter accounts, pretty much everywhere that we can find main topic of discussions being around cryptocurrencies. And so what you're seeing right here is the amount of Bitcoin mentions on crypto social media compared to its price over the last year. So the last time that we have seen a notable spike in Bitcoin related mentions was obviously here, as Bitcoin was breaking the 50K mark for the first time in several months. Since then, however, the average interest, let's call it, or the average mind share of Bitcoin on crypto social media has been declining. Even with this, recovery, short-term recovery for Bitcoin, the total amount of, mentions of BTC over time hasn't really, blossomed once again. It's stayed at this very sort of neutral level, right? And then we can also compare Bitcoin-related mentions to the mentions of other coins on in the crypto market. So social dominance is a metric that compares the social volume of Bitcoin to the social volume of other top 100 coins. So the idea of this metric is how popular is Bitcoin on crypto social media relative to other large coins. And once again, you can see that it has been fairly popular or fairly talked about right here around the 50K mark before the correction and during the correction. Since then, it sort of still retreated back down. We're currently at about plus 16%, which is fairly low. We have had a relative spike at about plus 47%, at around the 47K mark. But since then, even though it sort of stayed at that level, the social dominance of Bitcoin has dropped down to relatively low levels, just 16%. So what this means is that both in absolute terms and in relative terms, the interest or attention towards Bitcoin has been quite low over the past week. And so the last metric that I wanted to show as far as social data is concerned is what is the average mood of these mentions, because so far, we've only looked at the number of mentions, both in terms of absolute numbers and relative numbers. But the question still remains, are these mentions positive? Are people talking Bitcoin up? Or do they think that Bitcoin has more ways to correct to the downside? So the metric that we use to find that out is this one. And I've been looking at Ethereum before the call. Let's just move back to Bitcoin. It's this one. It's called weighted social sentiment. Essentially what it does is it parses all of the mentions of Bitcoin that we collect on crypto social media, and it labels them as either positive, negative, or ambivalent, right? So the higher that this chart is, the more bullish on average the sentiment towards the coin is. And then the lower that it is, the more bearish on average the sentiment towards a particular coin is. So as we can see, currently Bitcoin's social sentiment is fairly low. I think this is also a bit a bit of a data error. I think it's probably closer to here because it still gets recomputed on the 12-hour chart. But at the same time, you can see that overall, the general sentiment towards Bitcoin is clearly bearish, somewhere between slightly and predominantly bearish at the time of this recording. Actually, let me look at the 6-hour interval. Maybe we can see it a bit more clearly where we are. Yeah, we're quite low. Okay. Actually, as I'm talking, yeah, we're moving more and more bearish. So I think this is also, in a vacuum at least, a positive development for Bitcoin. So for those of you that don't really track our, that don't really read our insights or are new to these calls, social metrics, based on some of our backtests and also just based on our own experience, social metrics are, or high social metrics like elevated social volume, high social sentiment, it's rarely a good sign for cryptocurrencies, because what it suggests is that the crowd is becoming increasingly confident, the retail sector is becoming increasingly confident about a particular coin. There's a lot of hype in the air, and we might be approaching peak market euphoria. So at that time, the crowd sort of dominates with greed, and the market starts to punish. So at these levels, I think we're safe from that sort of punishment, right? In terms of social metrics, people aren't talking much about Bitcoin, at least relative to other cryptocurrencies and in general compared to Bitcoin over the last couple of months. And also, sentiment is relatively bearish according to our data. So overall, I think it's a pretty nice looking setup for BTC. Obviously, there's no sort of a guarantee that Bitcoin is going to break again quickly above the 50K mark. But from a social perspective and from the perspective of some on-chain metrics, Brian, I think it's looking cautiously positive. We need to see what happens during the beginning of next week. But so far, it's looking healthier than it looked last week, I think. Would that be fair to say?
As far as the actual ratio of positive versus negative score here, or on the social volume overall?
Social volume overall.
Yeah, as far as social volume, it's staying pretty low. Obviously, volume, I should say, is picking up, but dominance is staying down, which is generally a good thing. It means that still a lot of the attention is on projects that have been getting a lot of recent hype, as we can see Dino showing here. Solana, of course, is a big culprit. Ethereum has been a big culprit after it had its big boom earlier this week. And when those things are happening, and then Bitcoin rises, you'll often see this negative sentiment prevail because people are simply doubting that the coin that they weren't in can keep going up. It's almost kind of a hindsight bitterness that the crowd often has, where they, because they weren't in it, they are rooting for the coin to come back down so they have a second opportunity to get back in. And I think that's one of the dominant reasons why Bitcoin's weighted sentiment that we just looked at is still down. We can see Hex here just had its huge social dominance spike.
So I think this is a pretty good example of why I said elevated social metrics usually not a great sign for cryptocurrencies. So this is what we've seen in Hex recently. Social dominance and social volume, both of these metrics, so both in absolute terms and relative to other cryptocurrencies, Hex has been talked about quite a lot. So it hasn't actually been talked about throughout this this part of the rally, but here at around 0.4, it really starts, the crowd really started hyping up the coin, right? Because it was close to that 0.5, a very sort of strong psychological resistance. At this point, we are seeing massive amount of hype towards Hex, and I'm not surprised. We've actually, if you look at this red dot, that means that at this point in time, Hex was also in our top social trend. So within the top 10 words by our system, calculated as having the most or gaining the most social volume on crypto social media. So it was very, very popular. Again, popularity in short term, not a great sign for cryptocurrencies, especially when it happens during the rally, because it suggests that the crowd, everybody is in on the rally. Everybody has already bought in. There's going to be less buy-side pressure moving forward, and there's just going to be a lot of shilling of the project. And in general, that's not what the whales like, and that's not what the market likes. Market likes to punish greed. So this is what we don't like to see. And I'm not surprised that this is what happened with Hex in the short term. So yeah, the fact that Bitcoin, both in terms of absolute and relative social metrics, is moving to the downward direction, I think is a hopeful sign. So that's where.
Do me a favor and show Solana again too, because I want to point out that this social dominance spike can go both ways too. When things are when things are free falling for reasons that might be related to the fundamentals of the coin, maybe you can zoom into just the last month or something, so we can zoom in on that last spike. Yeah, that works fine. See how that the biggest spike that Solana has ever had
Yep.
happened on kind of a free fall. And yes, the price has continued to go down, but at least at the point of these spikes, there was a little bit of a pause in that free fall as, on a really short-term basis, the price was actually moving back up, and then people were beginning to um, wonder if it was all just fake news and it's time for Solana to go right back up to 200. And eventually, after the dominance came back down, the price continued to drop. But I can almost guarantee on the next big dominance spike, if it goes up to those levels that we just saw, it would indicate that there's at least going to be a temporary reversal that could be a good time to jump in. And if you're a risk taker and want to do some swing trading, these are the kinds of metrics you look for.
So this is what I mentioned at the beginning of the stream, is the fact that, throughout this, okay, so let me show you all-time stats for Solana. So nothing ever compared to these levels of interest in Solana. Nothing ever, all right? Since the start of the project, nobody talked about Solana, at least according to our data, even close to what we've seen over the past month, all right? Now that we've got the context, let me zoom in once again. So throughout these last couple of weeks of the rally, Solana's social volume and social dominance is, picked up every once in a while. And sometimes when it happens, there is a short-term correction. And you can see, here around the local top, here. So every now and again, there's a sort of a short-term correction. I actually expected each of these to have more of a powerful impact on the price, but I guess, the Solana bulls were just scooping every dip. What to me is most interesting and kind of telling is that this latest spike in Solana's mentions is the highest, so higher than any other time throughout this rally. And it is obviously, for those that have missed the news, is because the Solana network has had an outage which lasted for about 24 hours. And I think all of the nodes had to sort of move into a Discord group and consensually agree to reboot the network, which obviously brings questions of decentralization back into foray. And a lot of people were, trashing Solana because of it. Oh, the supposed Ethereum killer, but it's so centralized that, people need to move into a Discord chat in order to 80% of them need to agree to restart the network. That basically seems like a bank rather than a decentralized network. That was the main narrative. So this was the hate spike was higher than any hype spike. Which I think also points to the fact that this might be a little bit, there might be a little bit too much schadenfreude for Solana at the moment. And once it finds its bottom, it actually could be a nice time to scoop it up. I'm not sure. It could also drop further, but it seems like the reaction of the crowd was a bit too much, a bit too hateful. Just like super high social volumes that point to extremely positive sentiment can be bad, these extremely negative sentiment can be also good. Like Solana is by no means a dead project. So in a short term, I'm very curious to see what happens with it. All right.
Yeah. And no need to look at it now, but I just want to point out that this Solana is also included on that weighted social sentiment dashboard that we were looking at. So you can always check there and compare how the positive versus negative perception of it looks compared to the social volume and dominance here on Sandbase.
If you want to, Brian, share that template in the chat, that would be great for people that have missed it. Guys, there's also a great article that Brian wrote about the new template that we created for social dominance, where you can basically see the social dominances of all of the different coins and which coins are very high in social dominance, which coins are very low in social dominance, so they can figure out, okay, what are risky assets from a social perspective and what are maybe a little bit undervalued assets, maybe some that are flying a little bit under the radar. So Brian made a cool template with that. He's going to link it in chat so you can take a look at it. All right. Two things. Number one, I'm going to quickly go over something that I saw for Ethereum that I think is very interesting. And then after it, we're going to start taking audience questions. So already in chat, Max is looking at the chat. Let us know what coins you would like us to do some impromptu analysis on. on-chain data, social data, development activity data. We're going to take a look at 2 or 3 coins as usual. Like I always say, it's bonus points if the coin that you would like us to look into lives on Ethereum, because we have on-chain data, a lot of it, for ERC20 coins, right? So the on-chain data that we currently provide is limited, or I mean limited to Bitcoin, Ethereum, all ERC20 coins, Litecoin, XRP, and Binance. So if you want us to look into on-chain information, these are the coins that we can do that for. We can also look at things like Solana and, I don't know, Cardano and Polkadot, which we don't have on-chain data for, but we have other information like social information, development activity information. But if you want us to look into stuff like exchange flows, whales, I don't know, network profit loss, active addresses, make sure that it's one of the coins that I just mentioned. All right, keep spamming in chat so Max can figure out which coins we want to look into. Before that, I just wanted to show something that happened a couple of hours ago. I saw it during one of our meetings today, and I thought, all right, I need to mention it during the stream. So there was a big spike, basically a 2, almost 3-month high spike in the age consumed of Ethereum. So we don't really talk a whole lot about this metric on these streams, so some people might not be aware of what this is. Age consumed is a metric that tracks the renewed activity of previously dormant coins. So when you see a spike in age consumed, usually what that means is that some very old coins are moving on the blockchain, right? So I immediately thought, okay, that's interesting, because sometimes this can happen during either local tops or local bottoms. So I'm like, I wanted to know more about what this meant. And also when I looked at the network realized profit or loss, it seems like this age consumed spike has made a huge spike in the network profit for Ethereum. So the way that we calculate this metric is for each unit of Ethereum that moves on the blockchain, we take the price at which it was last moved, and we assume, let's say there was a unit of Ethereum moved here, and we assume this was its buy price. And then the next time that it moves on the blockchain, we assume this was its sell price. So there's a massive spike in network profit. So on average, the coins moving on Ethereum right now are moving at a massive profit. So that would suggest that it's probably some very old coins that are now moving at massive profit. So maybe it's some profit-taking activity. So I think I found what the specific address is that's responsible for this. So let me zoom in to show you exactly when it happened. It happened here. Actually, it happened. Yeah, it happened during this crash, right? I think actually right before the drop, and I'll show you why I think so. So the way that you can try and figure out what these types of spikes actually point to is you look at our top transactions table. So you type in top transactions, and you apply it to the chart. And now we're going to see all of the biggest transactions for Ethereum that happened over the last 24 hours. So I'm going to say, okay, only show me top transactions for the past. Oh, my bad. I don't know why I'm in 2017. I'm going to say, only show me transactions that happened in the last 24 hours. So what I'm going to get now is a list of top transactions on Ethereum over the last 24 hours. Sec. Sorry, 16 to 17. Because it's the 17th now. All right. So it's this guy. It's this guy. 196,000 Ethereum moving from one wallet to another. So let's look at this transaction first, right, on Etherscan. So it's just 2 wallets, right? We don't know. They're not labeled as anything. It's just one wallet here and moving 678 million Ethereum to another wallet. So if I look at the sender address, I can see that this guy has not done anything with his Ethereum for 700 days, right? 2 and something years. And all of a sudden, 4 hours ago, he moves all of this Ethereum to another wallet. And then that wallet, lo and behold, moves immediately, like not even a test transaction, right? Just a quick 600 million Ethereum, $600 million in Ethereum. He moves it to a Coinbase wallet. So if I look at this first address here on Sandbase, whenever you can click on any address and it will show you the historical balance or the historical holdings of that address over time. So we can see exactly when it acquired Ethereum and when it dumped Ethereum. And this guy, man, let me tell you, all-time data. Let's plot the price of Ethereum. All right, so yeah, this is what the chart looks like. This address. Now, keep in mind, I'm not sure. I'm still trying to figure out exactly. Maybe this is an exchange wallet that I've missed somehow, but it doesn't really look like an exchange wallet because so the only other coins that it has is Hex, and it only has about $400 of Hex. So if this is an exchange wallet, it's a very poor exchange wallet, right? So anyway, this address has accumulated a lot of its Ethereum right around the bottom here, man. So it goes from 0 ETH to 150,000 ETH on November like 29th. All right, very close to the bottom. And then he has another buying spree or accumulation spree at least here on August. What is this? No, it's like September 19th, right? So he buys another 50,000 Ethereum, or at least moves another 46,000 Ethereum to this address. And then after 700 days, he dumps all of it. In one transaction, he dumps all of it to Coinbase. And if I look exactly when he dumped it, this is when he dumped it, right before this crash. So is this connected? The question, I'll leave it unanswered. But I think if this was immediately transformed into sell side pressure, so if this address immediately sent all of this money to Coinbase and then started selling, I think it's not a stretch to suggest that this has had a relatively negative impact on the price of Ethereum in the short term. So quite a massive transaction. It's I think a good example of what you can do on Samebase. When you look at a metric and you see a big spike, you can actually dive deep and figure out exactly where it's coming from. So yeah, in the short term, probably some elevated sell side pressure came for Ethereum. So I'm not surprised to see it, fell below 3.5K again. Yeah. So wonders of on-chain data. You can't really hide anything, right? Anyway, that's gonna be it as far as what I wanted to talk about. Now let's see what you guys want to talk about. Max, do we have questions from the chat? What do they want us to look into?
Yeah, the top spot right now is DSLA protocol.
Okay.
The ticker is the same, it's DSLA.
Okay.
We should have on-chain data for it.
Cool. Yes, we do. All right. All right, let's look at DSLA.
It's actually the top spot with a big gap, so many people are interested in DSLA.
Really? All right. Or there's like one guy that is spamming it from several channels. If so, I mean, more power to
And is like resetting his IP each time.
Yeah, every time.
So then he's really into this.
Okay. Let's look at this coin. I don't know much about it, to be honest, but I will. I mean, I love it when I don't know much about a coin because I can't be biased in any way. So what I'm going to start with, let's just start with general network activity, right? So we were just talking at the start of the stream how Bitcoin's daily active addresses are starting to pick up again, and I think that's a good sign. So let's see what is the overall activity looking like for this coin. So we have had a period of, so it's only like 6 or 7 months old, so it's not a very, very old coin. But it seems like there was a lot of hype during the first couple of months of the rally. Obviously, everything was pumping at the time. So its daily active addresses have spiked to as high as 800, and here the peak was at around 1,148 addresses. So that's pretty high. That would definitely put it in the like top 25, 30 assets on the Ethereum if this was consistent, but obviously it wasn't. And also you can see that it's each of these spikes lasts for like very short, for just a couple of hours. So that probably means that it's people looking to get out of this coin and sell it, right? And that's usually why it happens during local tops. Since then, there's not a whole lot of activity, to be fair, on this coin specifically. So there's about, let's say, an average of between 50 and 70 addresses interacting with DSLA on a daily basis. I think ideally from like a long-term perspective, right? If you're doing due diligence on a project and you're looking for value investment opportunities, one of the metrics that I like to look at personally are active addresses. Is the demand for the coin on a network level rising or not? Currently, it's flat. Now, I will say, I will put a big caveat to what I'm just saying, because a lot of coins have had a very flat network activity over the past couple of months. So it's not just DSLA. I think if we look at something like, I don't know, Chainlink, I mean, it looks quite similar, right? Yeah, there was a lot of addresses interacting with it here, 25,000 at its peak. Currently, we're at about 4,000, 4,700. So I think also even Uniswap. Oh, sorry, not Unistake. But okay, I mean, Unistake is also a pretty good example. Uniswap. Yeah. Okay, well, let's zoom out of this initial spike. Same thing, right? So it's not just DSLA. So I wouldn't say, oh, you know, this one coin, there's not a whole lot of activity for that one, but everything else is booming. No, I think it's just on a network-wide level for Ethereum, there just hasn't been a whole lot of on-chain activity. And I think part of it is to do with the fees. It's just, you know, at least from my personal perspective, it has been very difficult at times to utilize the Ethereum network. And the reason why is if we look at Ethereum and we look at its average fees, they are freaking crazy, right? So even with this latest drop, they're still at about $18. So the average cost to interact with the Ethereum network is about $18. And that cost goes up exponentially if you try to interact with any sort of DeFi related protocol. So it can very easily go into like hundreds of dollars. So I think that's definitely got something to do with the fact that all of these ERC20 coins are quite low in terms of active addresses. So yeah, at the moment, DSLA is not showing a whole lot of strength in terms of network activity. Now, I will say, even though there's a plateau among a lot of coins, some coins have been able to do well, like Hex in terms of its active addresses. Yeah, it's been growing even though a lot of coins haven't been. So it's not, I don't want to make too many excuses for coins like DSLA, right? But it seems like at least it's found the level at which it's comfortable. So it's around 80 addresses. Now, this is pretty low. I would say there's not, okay, well, let's look at a screener and say, okay, how many coins have like around, let's say, an average of 50 addresses or more? I think that's going to be a lot of coins. So it's not like in the top 20 or 30 coins on Ethereum. I think it's actually probably like the top 100 in terms of just raw network activity. Doesn't mean that it can't rebound, but from a network level statistics, it's not looking super strong. So let me just see that real quick. Okay, thank you. There we go. So I do this quite often. I should show you guys more about our screener and how to use it. It's just that this is a very simple use case, so I use it quite a lot. So I'm gonna first say only show me coins that live on Ethereum. And then I'm gonna say only show me coins that live on Ethereum and have more than 50 daily active addresses on average in the last month. So how many assets is that? It's 300. So there's a lot of shit coins that's also gonna be on this list, right? It's just where DSLA is at the moment. So it's in a very large pool of assets. Some of them are going to succeed and they're going to live through the bear market. Others are not. So what I would like to see from coins like this is a more sustainable uptick in on-chain activity. Like at least let's start with the breaking the 100 DAA mark sustainably, and then moving upward, because that would suggest that on a daily basis, there's more demand for this coin and there's more addresses interacting with it. All right, so that's one. Let's look at something like active deposits. Right, so this is what I wanted to say. So see, let's look at active addresses first. I said, see all of these like spikes that don't last for a long time and why they're sort of very often around local tops. So the reason why is because that suggests that there's a lot of deposit activity around these times. And sure enough, you can see a lot of deposit activity around this stop, around before this crash, around this stop, and so forth. So even at this stop here, this one here as well. So active deposits are addresses that are being used to funnel DSLA to known exchange wallets. So I don't know where DSLA is listed. So, the more exchanges that it's listed, the more this metric makes sense and has an impact. But when you see spikes in deposit activity, what it suggests is that more people are moving to sell this coin. So let's see how much there is of this coin on exchanges. It seems like we don't. There's some bug with our data in terms of supply and exchanges, because it says it's minus 530 million. So obviously that can't be possible. Let me see. Yeah, there's some bug with I don't know where it's listed. We could be drawing from some problematic contract here. Let me look at exchange info. All right, so exchange inflow. Here what we're looking at is the total amount of DSLA that is moving to known exchange wallets, and very similar to deposits. Spike around this first top before a correction, spike at the second top, spike here at the third top, and we've actually got a spike right now. So that might be the reason why people are. So did DSLA get listed somewhere or something? Because there's a pretty big spike in exchange inflow today. So this could either mean one of two things. Either DSLA just got listed somewhere, and there might be some sort of an incentive for people to trade on that exchange. So there's a lot of people moving DSLA to exchanges. Like there's 35 million DSLA being moved to known exchange wallets. Obviously, that's not a lot because the price is quite low. But if that's the reason, that's not necessarily a super bearish indicator, right? It's just it's fine. But if it didn't get listed anywhere, this is potentially new sell-side pressure, and sometimes this type of sell-side pressure occurs at local price stops, and it suggests that people are looking to get out of this coin. So yeah, I don't know much about what DSLA has been up to, if it's gotten listed, or maybe Binance or Coinbase, or I don't know. This is fine, but if not, it could be a concerning signal. Let's look at its social volume. I assume we don't have a lot. Yeah, we don't have a lot. So at least on the channels that we're tracking, there's not a whole lot of interest in DSLA. So let me also look at development activity. Also, so development activity, for those of you that are not familiar with this metric, what we do is we track public GitHub repos of thousands of projects, right? So DSLA's development activity is quite low. This could mean several things. It's not necessarily a bad thing, right? It could mean, and I would need to go and check more deeply with our devs. It could mean that we're not tracking the proper repos for DSLA. It could mean that DSLA is working more on GitLab than GitHub, and we're still integrating GitLab. Or it could mean that their GitHub repos are private, which not a lot of crypto projects do, so that's sketch by itself. But at least according to this data, there's not a whole lot of so the GitHub repository that we are tracking doesn't have a whole lot of activity, right? So just 0.6 at the moment. Like if you look at something like, I don't know, I mean, sure, it's a crazy example, but look at Ethereum, 200, right? So this score doesn't really mean anything. It just means in relative terms that it's quite low. It's a score that we've developed for this metric, but overall, it seems like, at least according to the things that we track, there's not a whole lot of activity on these repos. And I personally think that can be a concerning signal in a long term, as a long-term signal, because development activity, a lot of people don't really use it, and I think it's a shame, because it's, in my mind, a very underrated indicator, because it suggests, it shows whether a project is committed to pushing innovation, right? If it's committed to pushing new features, to staying true to the roadmap, right? If people are pushing code and the project is investing more in coding manpower, then there's a higher likelihood that it's going to be able to deliver on what it promised. If the coding activity is low, I mean, it's the story writes itself. So keep it with a grain of salt. I would need to check what we're tracking for DSLA, but it's not looking great. All right, so exchange inflow. Let me see if somebody in chat wrote something about DSLA. Yeah, I'm not seeing any explanations for this spike in exchange inflow. So if it didn't get listed anywhere, this could be a problem. This could be a concerning sign because it might suggest that there's a new wave of sell side pressure for DSLA. It doesn't necessarily need to be, but that's what I'm seeing. All right, let's look at finally maybe the MVRV ratio for DSLA, and let's finish it with that. Yeah, so DSLA is a very young coin. So younger coins benefit less from a metric such as MVRV ratio because we need more data to figure out what are like historical highs and lows, right? So that's why I'm using, first of all, a 7-day MVRV ratio. So currently, the 7-day MVRV ratio is around the 0 mark, which means that on average, all addresses that have acquired this coin in the past 7 days are around break even. And it seems like there's a tendency for DSLA's 7-day MVRV ratio to peak at around this channel somewhere. I would say here. This would be a concern, like between 7 plus 7 and plus 7 and plus 20%. And then on the lower end, it seems like this is a support line at about -15. So we're sort of in the middle of the way. Could go further down and we touch this level, and this could be a potential opportunity to accumulate. Or if we keep going up at around plus 8%, it starts getting a bit sketchy, a bit hairy, and some people start taking profits. So these would be the levels that I would keep an eye on for DSLA. Although, like I said, keep in mind, MVRV ratio is very much a long-term metric. So I don't know if we really have enough data for this coin. Maybe wait for a couple of more months to use this metric properly. All right, that's going to be it for DSLA. Max, what's next? What do we got?
We only have 2 other assets with any votes at all. In second place is Terra Luna, and in third place is Chainlink.
All right, so for Chainlink, I'm not actually going to talk about it. You can read all about our latest link insights here. So go to Insights. One of our Santiment employees has written a very nice article about Chainlink yesterday. We called it Forgotten But Not Gone. Maybe it's a bit too clickbaity, but in general, I mean, Chainlink's on-chain data suggests that it's definitely been losing some mind share, both in terms of like how much crowd is talking about it, but also how much network activity there is. Like there's definitely, and I showed you, less addresses interacting with it, less transaction volume, less value being created on the Chainlink network, it seems like. So there are some like relatively concerning signals, but is it all that bad? Just read this article and you'll see. So, all right, let's do Luna, and then we can end it there. So obviously, we don't have on-chain data for Luna, but we can look at it from a social perspective and from a development activity perspective. So let's look at what we have for Luna here. Okay, so we've got, this is social volume for Luna. We've got several spikes. Let me zoom in. And then let me also see if there was ever a time that Luna is in our social trends. Yes, it was. It was here and it was here. All right, so I'll do this one first. So social volume, the amount of mentions of Luna on crypto social media. We've had it here, actually slightly before this high, but it suggested that the crowd was becoming a little bit too bullish about the coin, and you know, given this massive price rally, it was probably just spamming rocket emojis, and that was not a great sign. We had another one here before this first correction, but you know, it was basically the first leg down since the rally, and then we had it here at the, I guess, the all-time high for Luna. It was a relatively low spike, but since it's still a pretty decent spike in the amount of mentions. Now, I will also, this one was at the bottom, so this is interesting. Usually, we only see spikes in social volume at bottoms for like Bitcoin and Ethereum, because most people don't care when altcoins bottom out. There's not a spike in social mentions. So I don't know if this is price related or was there any sort of news for Luna. I would need to check. But yeah, this one also, I guess this one here, this spike here at the first leg, and then this one at the at the all-time high. Since then, we are moving down, both in terms of price and social mentions, and I think this is a good sign. I would expect, or I would look for social volume to completely normalize, like back to these levels where nobody in the world care about Luna, so that it can start to recover from a sort of a positive vantage point, right? At the moment, I think it's still a bit too hyped. It seems like there's quite a bit of people relatively talking about it. So maybe wait a little bit more. Not sure. And then let's look at social dominance. Yeah, so social dominance is even a bit clearer. So clear spike here, and then spike here at the top. Since then, social dominance has actually been pretty low. So even though social volume is staying relatively high, the amount of Luna mentions compared to other top 100 mentions has almost completely normalized. Well, not almost, not completely. So we're here now, and this is where as low as we got. So there's still a little bit more chatter around Luna than you might want, but it's getting there. It's moving in the right direction, which is down, right? Now I wanted to show you one thing that we've got. So we've got this metric, project in trends. You might not know what that means if you haven't looked through our entire platform, but we've got this very cool tool called social trends here. Social trends is a list of top 10 words. It gets updated every hour. It's a list of top 10 words that are gaining the most social volume, according to our data, compared to their previous 2-week average. So for example, we've got Shiba and Coinbase being talked about quite a lot recently, Citadel as well. So these are currently, these are the words that are gaining the most ground on crypto social media. So in our experience, and we've also done some backtest on this, when a coin's name appears, especially in the top 3 positions on that list, it usually points to market euphoria. It means that everybody is aware of the rally, because usually it happens during a rally, right? During a pump. Everybody's aware of the rally. Everybody's talking about it. So there's less money going to be moving into this coin because everybody is already into the trade. And in general, there's a risk or likelihood that the market is going to punish the bulls. So the last 2 times that we've seen Luna be in social trends was here, number 1, pretty close to the beginning of the correction, and then here before this mini correction. Now, this also points to sort of the power of how you can use social data. Is you can look at social trends or subscribe to an alert. You can add an alert and say, tell me the next time that Luna ends up in social trends. Just let me know via email or Telegram or whatever, and that way you'll know the next time that our system has considered Luna to be a bit too overhyped, right? All right, so the last thing that I wanted to see was what the social sentiment for Luna is. Do we have it as Terra or Luna? Got it as Terra. All right. Yeah, it's so again, spikes in social sentiment, generally speaking, not a great sign. Happened here before the first first leg of the first leg down, and then once again here, and we see this quite often. It points to the crowd becoming a bit too anxious and a bit too greedy, right? So here at the moment we are back in a relatively bearish sentiment, which I think is a good sign. Like if you look at previous times that we were at a relatively bearish sentiment, there has been actually most of the sort of recoveries have occurred from a predominantly bearish sentiment. I would like this maybe to even go a bit further down so that Luna bulls are completely out of hope, so that we can see another sort of strong move upward. Still, it's a good sign that we are on average moving back into a bearish territory, and also that social volume is starting to decline. So the less people talk about it, the more people are bearish about it, the more likely it is that Luna has a fertile ground to, start booming once again. And then the last thing that I want to look into is development activity for Luna. Yeah, so this is fine. This is more of what I would expect to see. So compare this to DSLA, right? This is development activity for Luna. Over time, it's definitely been moving in a, let me take like a 7-day moving average if I can. Oh no, I can't. Oh, okay. Okay, let's just do 5 days, 5-day interval. Yeah. So this is what the development activity for Luna has looked like over the last 3 years on a 5-day interval. It's definitely moving in a positive direction and actually moving higher and higher regardless of its price action. So first of all, this entire period of 2 years where Luna was relatively low in price, sure, now it looks like it, right? But there has been a lot of volatility here. The devs kept on pushing code. And even when we crashed back in May, there was a pretty big uptick in the development activity of Luna. And now it's moving upward even higher. So from a sort of value investment perspective, this is what I like to see, right? I like to see projects that are continuing to push code and that don't really care, whose teams don't care about what's happening with the token price. They don't care about the market. They just want to get to the next step on their roadmap, which Luna seems to be doing. So good for Luna. All right. Unfortunately, Luna is one of the coins that we don't have on-chain data for. I would really love to see stuff like active addresses and exchange flows for Luna right now because it's correcting a little bit. I would like to see how many people are panicking and what its whales are doing, but not yet. At least at the moment, we don't have that data. Anyway, we're gonna end it there. Brian, anything to add before we sort of close it for the week?
No significant additions. I appreciate all of your questions and the nice landscape of projects that Dino got to show off today. Thank you all for being part of this. And I just want to remind everyone how much the like button and the subscribe button really help us. So please feel free to spread the word to your friends and anyone else interested in crypto among your communities. And I appreciate all of your participation as always.
Guys, we're looking to break the 10K subscriber count. It would be very helpful and motivating for us if you could help us on that road. We're about 7.1, 7.2, so there's still a bit of room to grow. But yeah, any sort of signs to YouTube that our streams are interesting to people is very much appreciated. So likes, subscribes, shares of this stream, they help a lot. So that's going to do it for us for this week. Thanks for everyone for sticking by. I'm cautiously optimistic about Bitcoin. Let's wait to see what happens at the start of next week, but daily active addresses are picking up. Whales seem to be starting to accumulate once again. Supply on exchanges is still relatively low. Social metrics are low. Not a lot of people seem to be talking about Bitcoin, at least, relative to, I don't know, May and, March and April, all that sort of that period of price appreciation. So it seems like a decent period for BTC. Obviously, there's no guarantees. There might be something that happens on a derivative side, or there might be something like we've seen for Ethereum, 1 or 2 massive whale dumps, and everything turns on a dime. But for now, I'm remaining cautiously optimistic. So yeah, on that note, we'll probably be back next Tuesday or Wednesday with another sort of midweek update video, and then we'll be back on Friday with a regular stream. If you don't want to wait until then, we've got a link in the bio for the link to our Discord channel. Some of the things that we talked about were first brought up in that Discord channel. So if you don't want to wait until the weekly stream, make sure to check out our Discord and talk to us there. All right, that's going to be it for us today, guys. Thanks for joining. Thanks for sticking out by the end, and I'll talk to you all in 7 days.
Much appreciated, guys.
All right. Take care, guys. Stay safe. All right. See you next week.